Okay. Um, Welcome, guys, and hope you all have been doing very well. It's another weekend for those of you who have been learning the market business model. I think this is an opportunity for you to um, reflect, right? And also, what's it called now? Study, yes, so that you can improve in yourself as a trader. You're not going to start from perfection. You're not going to start from perfection. It's not possible. It is in the renewal of your understanding of how the market operates, how it works, the dynamics that makes for the for price action. Yeah, those are the things that makes you a complete trader. A complete trader is not a perfect trader. A complete trader is a trader who wakes up in the morning, comes to the market, knows what price wants to do, and makes money from that understanding of what price wants to do. That's knowledge of what price wants to do. Okay. So while it is good that you are learning the real deal behind the market, it is also very important that you subject yourself to learning. Okay, to very you subject yourself to stringent learning. Okay, you do not take pity on yourself, especially for those of you like myself who are still very young and you know just starting out. Now there are other things that would that and most of the problems you will face as a trader will come as a result of ignorance. If you don't know why price will buy, right? It is not because of price did not buy. It is that ignorance of why price should buy that you don't know, right? It's not that eventually price will not buy. I hope you guys are getting right. So if ignorance is one of the arch enemy of a trader, then the trader should subject themselves to finding knowledge so that they can be able to conquer this ignorance. I mean, it's very simple. Look at this bullish candle here. If somebody can just come and tell me and say, okay, on this particular day, price will be bullish, that is information, that is knowledge. And what will I do? I will just, on the opening of the day, I will just buy and I'll rest. But there is nobody to do those things for us. There is no magician that can look into the future. There is no pastors or anybody that can do those things, right? There is no spiritual power that can do those things. So we have to now subject ourselves to principles, understanding things that makes for. We have to now start studying things that can help us understand price delivery, so that even though this day is not yet formed, we can have an insight to understanding that, okay, based on this and this and this particular day should be bullish, and then we now position ourselves to make profit from it. I hope you guys are getting. So now I've been teaching you guys the market business model for months now, and our lecture still continues. Uh, the reason for the length of the knowledge is because you see what you are learning here in the market business model is a solution to most of the problems that many traders are facing. In fact, most of you are already trading. You did not just start trading technical analysis from my channel, right? You were already trading, but you've been having one or two issues. Some of you, your issue is pullback. Some of you, your issue is direction. Some of you, your issue is entry. Some of you, your issue is understanding price dynamics. And some of you, your issue is targets, taking profit, and so on. And if truly these are problems that you really and truly want to solve, then I do not think that the length of knowledge that you will need to get right, should matter to you, right? A drowning man will not ask for cars. A drowning man will not ask for, what's it called now? Houses or even land. A drowning man would beg that he does not drown and he gets a stick or a log that he can use to rest his body on so that he cannot drown, or a lifesaver jacket or whatever. The point is that a drowning man will hang on to anything that guarantees him that guarantees his safety, right? So that he will not drown. The same thing you are as a trader. You're drowning in loss, you're drowning in whatever it is, right? You do not whatever strand, whatever thing, whatever information is coming your way that proves and promise and shows has the potential to transform that problem in to cancel that problem and give you a solution, then you should be calm enough, relax, and listen and learn. You understand? So we'll continue in our class, in our lecture. We still have a couple of teachings to do. We're still talking about inversion. The whole lecture series we are on now is on understanding price continuation. I've taught you guys price reversal, right? And I've seen majority of you have been using it to make money from the market. But one thing you will notice is sometimes when when volume gets transferred, it will only go a little bit in your favor, but it does not create the move, right? So when we get to, there are a lot of things we'll still talk about, like understanding daily bias, how to frame daily bias, how to know that, okay, this particular day will be bullish or bearish. That is understanding daily direction or candle direction per se, because basically in MBM, we don't care if it's daily, hourly, or monthly. What we focus on is candle. Well, I've been referencing daily because that is where I am using to teach you guys, as you can see on my screen here. That's the time frame I've been using to teach you guys, and it is the time frame I will advise you guys to pick and start from, especially if you are just learning the market business model. Okay. So what else? So these are just the introduction to today's class that I think are essential. So we'll just pick up from where we stopped, right? Now, I also want to let you guys know that majority of you have sent me messages, questions, and a lot of things. And honestly, I think so far since I started this market business model, I've received close to about almost 300 questions from different people and even similar people. And truth is, I'm a human being just like you are. I cannot I cannot answer the 500 or 200 questions. I can't even. I hope you guys get. I'm human. Even if I say I want to make content, at a point I get bored. You guys can see that even the way I'm dropping this lecture for you guys here on YouTube, it's at my convenience because I'm a trader, right? And the freedom that comes with making my own choice, I just love it. So this is what I'm going to do for you guys, right? For those of you who have one or two questions, going to one or two things, please join. There's a Telegram link that I'll post now on this channel. It's on my channel. Please join the Telegram link. I'm going to give, I'm going to give information on how you guys can, join a question and answering group and also a trading. Because what I want to do is I actually want to create a system. Probably it's going to be paid or it's going to be free. I don't know. But what I want to do is create a place whereby I can be able to guide you people, those of you who have been trading the market business model, guide you people personally, okay? So I'll tell you this is what you do, this is what you should not do, this when you see this. So it's beyond the YouTube channel teachings. I'm very sure you guys know that on YouTube teaching, I can only do as long as I can. But, the whole live trading experience of a thing, exactly, that's what I'm saying. So what I would do is I would just craft a way that all of us can, those of you who are serious can come up and we can start I can start guiding your live trading experience. You understand? So probably in the next video, I will drop the what we will do. But for now, just join the Telegram. It's in the link in the in my bio, right? In the channel description, you'll see the link there, right? And I don't know. I think I will drop the link in the description too, so that you can join. So just join and follow up, and we'll be good, right? Okay, so let's get down to business. In our last class, I was trying to explain to you guys that I think, yeah, we were trying to solve the issue of price continuation. And in a bid to solve that issue, I explained to you, I was using an explanation that, price is continuous, price moves. The reason why you see a bullish move in a bearish trend is the same reason why you see a bullish move in a bullish trend, right? A bullish move is caused by bidders being aggressive, and a bearish move is caused by askers being aggressive. Yeah, this is it here. I think, yeah, this is it. Yeah, so I drew these two parts and these two parts, and I said, you see this bullish move here, you see this down part here, and this down part here, they are caused by the same thing. And I explained the reason here for us, right? I see this bullish part here and this bullish move here, they are caused by the same thing, regardless of the trend. And you notice this is a bullish trend and this is a bearish trend. So I was trying to let you guys know that in the market business model, we don't do trend. Anything trend, we don't do trend. Our focus is on price. We follow price, we follow volume, we follow liquidity. We're following real price, right? Our focus is here, not the whole wherever. And then I explained that, and then I explained the reason for why price would pull back and continue, and then in a bearish trend. And then I also explained why price will pull back a little bit and continue, pull back and continue, right? And I explained that also. So go and watch the previous video if you have not watched it. So since we are done with understanding, the price movement and nullifying and now we know that there is nothing like trend. The next thing we now need to do is now the question you now ask is, Max, how does this relate to everything that you have been teaching so far? I mean, as a trader, you want to be able to use this thing in trading, in real life trading, right? Exactly. So those are the things that I'm going to be teaching you guys. Now, so far I've been teaching you guys what's it called now? I've been teaching you guys, I think so far our understanding, or what we have been trying to understand is swing high and swing low, right? How they work, how they form, and all those other knowledge that has to do with it, right? And we'll definitely trash everything, don't worry. Let me just delete all of these things because I won't be needing them again. Now, you see, for price to move from point A, right, to point B, so this is point A to point B, right? Price would not be in a straight line. Price would always go this way, reverse, come down a little bit, come down a little bit, go up, go up, go. And for some of you, you would think that you see this whole back, this pullbacks, this retracement or pullbacks as you will call it, yeah. Most of you would not know that it is just pullback. Some of you mistake them for reversals, thinking that, okay, price is about to start selling. And this is the whole point of the whole lecture we are doing. How do we know that despite this pullback, price is still in a bullish, price is still going to point B? How do we know that? So those are the things I've been trying to help you understand. So don't be confused, right? Yeah, I'm just refreshing you guys' memory. Now that I'm done explaining the whole price, the reason why price goes up, why there is nothing like trend, now we'll now need to come back to what we've been talking so far about swings. Now, remember I teach you that a swing low, right, is typically made up of, you will see in a swing low, you will see red or down close candle followed by up close candles, right? The point is there is a reversal in price, right? And then in a swing high, you see high close candles that close high, followed by multiple down close candles. That's swing high. Now, in the market business model, right, we believe that the most important part of swings, swing low and swing high, are formed at candles lows and candle high. Anything beyond or aside from this is the reason why majority of traders will enter a trade, price will take them out and continue that way, right? And then we are still trying to build understanding for anchor candle also. So let's put those ones in check, right? Good. Now, now that we understand that price is continuous, we have established that price in the real sense of price is continuous, right? Then it means that in the scenario of a bullish trend, like in a bullish trend or in a bullish move, what we would most typically see is, what we should be seeing is combination of swing lows or multiple swing lows. Exactly. So what we want to see as MBM traders is swing lows. Why is it doing like this now? Exactly. I think all is covered. Good. Swing lows, right, that are higher than each other. So you see the swing low here. It should be higher than this swing low. This swing low should be higher than this swing low. Now, we do not care about whatever happens in between the swing low coming lower than each other. But the point is that swing lows that are higher than each other. Now, most of you will call it lower high, but just follow what I'm teaching you. That's not what I'm teaching you. It's not lower high or lower low or whatever. Please follow up, open your mind and learn, please. Now, you see this swing low here that makes up, that at the low of this candle, right, of the anchor candle, right? If we replicate this swing low and we make them into, let's say, we bring them into the same, we make them into a singular price action like this, like this, we would see that we actually have, up, down, up, down, up, then down. And it continues like that, right? But these are combination of what? Swing lows. And swing lows are tantamount to what? To price delivering up. Remember, that's basically what swing lows do. They are tantamount to price delivering up. Swing high are, they are at the high point, okay, at the high of candle, meaning that price would come down based on what I've taught you. But then when we combine swing highs together, swing lows together, we still have swing lows, and then inside that swing low, we still have a swing high, because this is bullish, bearish, and then bullish. The point is there are swing high, but the point is, what's it called now? Price going up are created because of multiple swing lows, not because of the swing high. So whenever you see a sell, let's say this from this high, price starts selling, it doesn't mean that price is reversing, right? It doesn't mean that price is reversing. What price is just doing is creating a new swing low. And you know that based on what I've taught you, right? Based on what I said about swing low, I said what? Swing lows are, you see, what's it called now? You see bearish candle followed by bullish candles, or bearish move. Let me not even use candle. Let's use move. Yeah. Bearish move followed by bullish moves. So, and that is basically what's happening. bearish move followed by bullish moves, bearish move followed by bullish moves, bearish move followed by bullish moves. Now, does it mean that there is no chance to sell? Of course, there are chances to sell. I mean, look at this. This is a sell, a bullish, a bearish move, a bearish move. But the point is that since price is continuous, this swing are continuous also. So they just follow price. So as MBM trader, what we see is just price going up, regardless of this whole up and down, up and down. In fact, do you know the interesting thing? Now, let's imagine that this whole move here is on the lower time frame, let's say 15 minutes. If we go to the daily time frame, what we would see is just one candle. Meaning that price had been bullish, price had been going up. I hope you guys get what I'm saying. Now, similarly, in a bearish move, what we would see is what's it called now? You see bearish swing or swing high, followed by another bearish swing or another swing high, right? Swing high that is lower than the previous swing high, swing high that is lower than the previous swing high. Now, in some very interesting scenario, right? You would see swings. You see price just, swings that are, let's say, for example, now, that are, what's it called now? Swings that are higher than, no, this is not what I want to do. Yeah, this is what I want to do. So in very interesting scenario, you see swings that are higher than, the previous swing. Like this swing now, this is a swing low, a swing low. The next swing low should be following, going down, right? But then you see a swing, you see that it refused to go down. Instead, it still does not mean that price has changed direction, right? Remember that a swing high is not yet formed, right? A swing high is a combination of what? Is what? Bearish trend followed by bearish move, right? Followed by bullish move. And the more we keep on seeing bearish and bullish move, right? And in a sell trend, you see bullish move followed by bearish move, bullish move followed by bearish move, bullish move followed by bearish. There is nothing yet that proves that, okay, this is price changing direction from a bearish from a bearish to a bullish. Except, of course, if eventually price changed. Let's say, for example, now we now see something like this. And that is when we now have what? A bearish move. I'm sorry, a bullish, no, it's supposed to be lower than that since this is a bearish move. Exactly. And let me just make this one like this. So we see what? A bearish move. Since, price is selling, right? And swing low, and then in some cases you see swing low that is higher than the previous swing low. Doesn't mean that price is reversing. It doesn't mean that price is reversing because it has not given us reason for reversal, which is a swing high. Until we now got our swing high here. Now, what makes up a swing high? Bearish move followed by a bullish move, and then a bearish move followed by a bullish move. And this is when we now have a trend or a price, price reversal. And this reversal is even based on the time frame that we are trading. I hope you guys are getting what I'm saying. So let me rephrase that. Let me start all over again, right? Since price is continuous, that means that for us to continue buying, what we want to see is swing highs. Remember, swing highs are what starts a bullish move, right? That causes price to move from point a lower price to a higher price, right? That is the work of swing low. Swing highs are what causes price to move from a higher price to a lower price. So for price to continue moving up, we need combination of what? Swing highs, right? So we see a swing high here, another swing high, another swing high. So basically, if I delete all the old sell move here, if I delete them, if I delete all the old sell moves here, price is still bullish. Why? Because this was where we started from and price still went up, right? Exactly. Now, if I still delete all the bullish move here, if I delete all the bullish moves here, right? Sorry. All the bullish moves, price is still bullish. Why? Because price started from here, and regardless of the sell candles, sell candles, sell candles, price still moved from a lower point to a higher point. And why was that possible? Because of the work of what? Swing lows. Right? Now, to identify swing lows in MBM, we call them climax. Origin. Rather, no, not climax, origin. We call them origin. So this whole move here, we call it origin. So to identify this, we use it, we note them as ORIGIN. And the reason is because this is the origin of this move, the beginning of the move, right? And the same thing for a sell move. Now, sorry, let me check my notes here. Okay. Yeah, I've not gotten to origin. So guys, in this whole thing, in the market business model, we call it, what's it called now? Inversion. This is what we call inversion. Pardon me for that mistake. Origin, prime, and climax, those ones are combination, are what makes up an inversion, which I'm going to teach you. So I think I got lost in my teaching there. So we call this inversion in MBM. You see this whole swing level here, we call it inversion. So a swing high is a bullish inversion, a swing low is a bearish inversion. Now, we do not just call them inversion just because we want to give it a name. I'm going to teach you the component because it's a swing does not mean that it's an inversion. Exactly. So I'm just trying to let you know that these are the things that we use in understanding inversions, which I've been teaching you guys. I hope you get. So regardless of bullish move or bearish move, remember we are following price. We are not following bullishness or bearishness. So regardless, either it is a there are bearish candles or bullish candle, our focus is price. And in this move here, price started where? Price started here, and price was able to get to where? To here. And since MBM traders follow price, we don't care about bullish, either it is bullish or bearish, we don't care. Our own is that price moved from point A to point B. And this is the reason why MBM traders, when you remove the chart, the candles, even if you remove both the bullish or the bearish candles for them, they would still be able to trade because they understand price, as long as you give them price, right? Exactly. So the same thing in a bearish move, right? So we see price create multiple swing lows, right? Right, that's multiple swing lows, and then either you remove the bearish move or you remove the bullish move. It doesn't matter. The point is price move from a higher point to a lower point, right? Now, how does these things now relate to inversions? You see, in inversions, there are, okay, before we proceed, let me just show you what example of what I just explained to you now. Let me just show them to you. So I'm going to use this whole, let's use a very good, let me look for it. Let me delete this whole thing. Now, let's use this whole price point here. Now, for a bullish move, you see this whole move from this low. Since we follow price, we don't follow either pullback or whatever. We don't care. In MBM, we don't know what is pullback. We follow price. So we're going to use from this low to this high as example. So what I'm going to do now is I'm just going to remove all the bullish candles. So you just have to watch this move. This move is where we are referencing. So I'm going to remove all the bullish candles. Or the bullish candle, I'm going to remove them. This whole move, let me box the move. Exactly, this whole move here, right? Yeah, let me check if I'm correct. Yeah, This whole move from this low to this high is what we are doing. So let's remove all the bullish candles. All the bullish candles. Now, when we remove all the bullish candle, the price still went up. It was still a bullish trend, right? Now that we have removed all the bullish candle, what are we seeing? Just bearish candle, yet we still made money. I mean, these are my bearish candles, right? These are my bearish candles. So we still made money. Now let's remove all the bearish candle and bring back our bullish candles. Let's remove all the bearish and bring back the bullish candles. So I'm going to remove all the bearish now and bring back the bullish candles. And you can see that it's still the same thing. Price was still from this lower point to this higher point. Now, the thing there is that, now let's note what I just taught you guys based on swing lows. So we see that in a bullish move, you see a swing low, you see this sell move followed by this. Sorry, let me delete this thing. So you see this sell moves followed by this bullish move, and that's a swing low. Another swing low is a sell move here followed by this bullish move, another swing low. Another swing low is this, bearish move here followed by this bullish move. That's a swing low that costs. So you see swing lows that are higher than each other's, right? You understand? And now, these are foundational understanding for price moving going up. You just do the opposite for price coming down, which is swing highs that are lower than each other. So in a bearish move, we want to see swing highs. You see the swing high? Yeah, swing high. How do we know it's a swing high? Price, the old bullish move followed by a bearish move, bullish move followed by a bearish move, and then another bullish move followed by a bearish move. Now, see this bullish move here was higher than this bearish move. You see this swing here higher than this other swing, but still price still came down because the fact that the point is it's still a swing low. So in MBM we try to differentiate between swing low and swing high. Now the interesting thing here is that, Max, look at this old price level that you just showed us. Is this not a swing low? I mean, you are showing us swing high, right? You're showing us another swing high, you're showing another swing high. But below this swing high, there's a swing low, which means that it is valid to look, because this is a sell move that caused a bullish move. Another sell move that caused a bullish move, right? While this bullish move is what caused a sell move. So you see the fractality of the market, how market just intertwine, and it can confuse you as a trader. In fact, let me go back to that one that I showed you guys. So you can see that this bearish move that caused this bullish move, right? Yet it is this bullish move that still became the swing that caused this bearish move, right? Now, this bearish move here, this is a swing low, is what caused this bullish upward move here. And then this bullish upward move is what caused, is still a swing high. So we are seeing swing low, swing high, swing low, swing high, swing low, swing high. And these are the things that confuse you as traders. And this is where inversion comes in. And this is why I'm saying, because some of you can be very sarcastic, okay? The explanation of swing is for you to be able to understand inversion. I'm using it as a baseline education so that you can understand what I'm bringing to the table for you. So that is how you are now, because some of you have, for example, if you go to the to lower time frame, you'll be confused a lot. I mean, look at this. Based on what I just explained to you now, you will see where a candle, exactly, look at a very good example now. You see how price created a swing low here, right? Went up and then created a swing high. And remember, at a swing low, what do we expect? Price going up. At the swing high, what do we expect? Price coming down. Yes, price came down, but it was not the move. I mean, that is not what price wants to go for the long time, right? And then you see this swing low here, created, price went up, another swing high here. In fact, the interesting thing is that a swing can even be created, but it will not be respected. Look, for example, this is a bullish move here, right? Followed by a little bearish move, although it did, okay, yeah, a bullish move that is followed by a bearish move here, and then you see price did not respect it. Another bullish move here, followed by bearish move. And then price did not respect it. Another bullish move here, followed by bearish move here. Yet price did not. So yet price did not continue that way because it keeps on clearing the high, clearing and all those kind of things, right? And the ones that price eventually even went, supported, see how shallow they were. Price just, created a swing high, came down, and then created another a swing low, and then went up, created another swing high. The point is, Sir Max, I am tired of all this noise. I want to be able to know that, okay, from this low here, this is where price is going to. Price is going up to this point. That's what I want to know. I don't care about all these these pullbacks. Those are the things those are the places where I used to lose my money. If that is your case, then you still need to continue watching these videos because I'm going to explain everything. So what I just said is that this is where what? Inversions come in. I hope you guys now understand now. So we understand that price moves up. Okay, for price to go up from point price A to price B, it will need to create multiple swing lows. That is the first thing we note. I've told you. And for price to go from a high price to a lower price, it needs to create what? Multiple swings. It will create multiple swing highs, right? This is based on price action, not really, because if you go to higher time frame, you won't see those swings, but we are following normal price narration for continuation. I'm teaching you what happens inside that time frame. I'm teaching you what happens inside an anchor candle. We're still going to an anchor candle. Please follow up. I'm just teaching you. I'm like zooming everything out for you to see. So first, we started from the fact that price is continuous, right? Where I have to show you that because of I have to demystify the understanding of the fact that price is coming down does not mean that it's reversing. It's just a pullback, right? Now I'm teaching you how and I've also taught you how pullbacks are created. Now I'm teaching you how to filter through the old pullbacks things. And the first thing I've taught you is that it swings for price to move from a lower point to a higher point, from a lower price to higher price, multiple swing lows will be created, right? Right now, that is it. And for price to move from higher price to lower price, multiple swing lows would be created. Now that we have this understanding of this, what I've just taught to you, now this is where inversions now come in. Because you see, a swing that went up, how do we know that it's not coming down? Sorry, you see a swing, this is a swing low, and then how do we know that price would this is where price wants to, this particular spot here is where price wants to reverse from. And then how do we know that, okay, this whole thing is even a swing, is a pullback in the first place, and where exactly in that swing, in that reversal will price now continue going up? Those are the three questions we must answer. Question number one, how do we know where this whole move is going to stop? How do we know that truly this is a pullback? And how do we know where that pullback is going to stop and continue going up? And this is where inversions now coming into play, right? So what I've been teaching you guys so far is still understanding inversion, but right now we are now at the real deal, the real point of explaining inversions. You understand? So you see, for price to move from, okay, I think I need to explain that other point properly. Let's see. Sorry. I think I need to explain. So let me just hide this because I won't be needing them. Okay. So yeah. So let's proceed, guys. Now, you see, in a bullish based on what I've explained to you, right? If price is to come from an uptrend, from an up price, that's a high price, to a lower price, it must what? Create multiple swing lows, right? Multiple swing lows, multiple swing lows, multiple swing lows, multiple swing lows. Because price will not go in a straight line, right? Good. Now, the interesting thing is, you see this whole multiple swing low, let's say it's on the 15-minute time frame. If you go to the daily time frame, it is just one bearish candle. Now, let me help you understand it, right? When price open, let's imagine this is where price opened, right? Let's imagine this is where price opened, right? This high here. Price opened, create high price, and then let's imagine it now give us VTA here, volume transfer to ASCAs. Automatically we are trading there, right? Now what will happen is that since this is the opening price, price went up, give us VTA, started selling. Now for some of you, once price just got to this spot here and started reversing, sorry, let me delete that. Now when price gets to this spot here, once price gets to this spot here, start reversing, you get scared. Some of you will close the trade, some of you will be worried and all those kind of things. So those are the things that I'm helping you to demystify. So that next time you see price doing this, you know that, okay, it's just a pullback. And for some of you, just because price has created VTA doesn't mean. So there are a lot of things that we need to talk about, right? And we'll clear all of them. I'm just helping you understand. So basically what you will see is price open, went high, then start dropping. So what we are looking to confirm is that at the end of the day, we are able to cash this move from wherever it started, from what's it called now? From the open, gives us our VTA, then we sold down. Now, then we sold down to this portion. Now, this is another thing that I now love about how MBM works together. Remember when I was teaching you, I said swing highs are created where? They are created at the highs of candles, and swing lows are created at the low of candles. This means that whenever you want to trade VTA, make sure that it is above the opening of a candle. Because by the time you are trading VTA inside the middle of a candle, unfortunately, price will take you out. Why? Because, well, truly, you might see what looks like VTA here and all. Probably price did not give you entry here, or maybe you missed it. You now want to go and enter here, and then you see price will take you out and then continue. So a rule of thumb is understanding the dynamics of market, since swings are created at highs and lows of candles. So every reverse, every week that you see, sorry, I'm not talking about, every week that you see, right, which is a low, every week low and week high, what is resting at those points are swing low and swing high, right? So it just makes sense that we try to look for our what? Our VTA. Since VTA means that price at the high, when price is as clear previous candle high, right? It means this is the new high, and it now gives us VTA. So what do? We sell. But when price is now, let's say for example, in a bullish trend now, in the case whereby we are expecting price to sell, so candle, it has cleared previous candle high. Now it starts to clear previous candle high, it must be bullish. Now that bullishness, it now gave us VTA. You see that immediately it gave us that VTA. That's our entry. Why? Because now we are sure that price is above the opening, and since price is above the opening, we would most likely want to see our swing high around this point. So once we enter at that swing high, price starts selling, and they will sold down. That way, even if the old, what's it called now? The old whatever happens, the old what's it called now? The whole pullback of a thing happens, we know that we are going to hold this trade and our levels are protected. Let me use a very good example for you guys. Let's go to the 4-hour and let me use the let me use let me use, so this is the 4-hour. Okay, let me go to the 5 minutes and then I'll use the daily time frame as conference. So I'm just gonna put my session at this thing here. Okay, so I've put a session, and just for the sake of reference, let me use 4 hours. For the sake of time, rather, let me use 4 hours. Okay, instead of daily, let me use 4 hours. Right. So, well, I can still use the daily. Let's go with the daily, guys, because I based on what I've advised you guys, always go with the daily instead of the 4-hour. Reason is because of you don't want to get yourself hot, especially if you are just starting. So let's start from let's look at a very good example. Now, so the first thing, look at this particular day here. You see how price cleared that previous day high, and the moment it cleared that previous day high, what happened? It gave us our VT, volume being transferred to ASCAS here. See that? Volume transferred to ASCAS, and that's it there. Short. So a short there. Right. And then price went down. Now this our entry is where it's around the opening, it's above the opening price of the day. You see, above the opening price of the day. That's the first rule, and then it's around the candle high. So whenever you are trading, you're looking for entry, let's say for VTA, always make sure it is above the daily opening price or the candle opening price, wherever candles you are trading. For those of you who wants to trade for hourly, right? Above the who wants to trade the hourly candle, whatever time frame you choose. Remember, an MBM will follow candles, right? So let me use the 4-hour instead. So for the sake of those of you who, let me use the 4-hour. So that means I'm going to remove this, and I'm going to do something like let me just let me just use some candles. Just reference just few candles. I think this should be enough. So on the 5 minutes, which is my time frame for picking entry, so you can see this particular candle. This is where it opened, and then the price went up. And then when price went up, what happened? It gave me VTA here. That VTA, where is it? That VTA is above price. That VTA is above the price. See, it's above the opening price rather, right? It's above the opening price, which means that it could, this could signal that price is what? Going to, remember, price swings are created where? Around the highs of candles, right? So anything above the open could create the high. And you see this bullish move here, followed by bearish move. You see that that's a swing high, and then price gave us our VTA, and I think this was close to about 1:5 here. We rinse and repeat the same thing for this candle. Now look at this one here. You see how price gave us a VTA, right? But now this is the interesting thing. It is below the opening price. Despite the fact that it has cleared previous candle high, it is still below the opening price. So this could be a way for you to now filter your trades. So you might not want to take this. This is the candle open. This is where candle opened from. This is the candle opening here. This is it here, right? Price cleared previous day high, right? I'm sorry, previous candle high, and then, give us a VTA. So we might not take this trade, even though you eventually, some trades you will not take will eventually go your way. That's trading for you. But if you had even taken this trade eventually, you see the price will still go up and take you out. Now the one that now gave us a very good deal is this one here. You see price open below the opening of the below the opening below the opening of the candle, right? But did it clear previous candle low? No. So this is another trade we are not taking. So despite the fact that price gave us VTA twice in this candle, we did not take it until when our confluences were now correct, were matched here. So you see price, yeah, it didn't clear this high, but it's almost. So this counts, right? So let's imagine we didn't take this trade, right? Because it did not clear that high too. So we're looking for the one that counts. And you see how we now start good. Now this is why I love the market business model. So this first one, I'm sorry, yeah, it took the trade though. It cleared that level though. Oh, am I streaming? Let me zoom in. Oh, come on. Exactly. So let me show you guys that. So okay, it did not take it out, so we are not taking that trade. So we're not taking this trade, we're not taking this one, we're not taking this one. See how we are filtering our VTAs now, right? And then this candle did not clear any high. It cleared previous candle high here. Clear previous candle high here. Yeah, clear previous candle high here, but there was no VTA here. And when price finally cleared, now let's now come to this particular candle. See this candle now? This particular candle here, this particular 4-hour candle. Look at it. Price cleared previous candle low and then did what? Gave us VTA, right? Around that candle low here. Now, if you go to, let's say, 3 minutes, you see the VTA very well. Good. And that's it there. So that's our long position there. It's a long position there. And you can see that was what now ignited the move for the day. So basically, the daily move, the move of the day, was actually ignited by what? By a real VTA forming, like price clearing the low, price forming around a swing level and then giving us VTA. In fact, if I'm very sure if I go to, let's say, for those of you who like to refine a lot, if we go to lower time frame, we'll be able to even refine this further. So that's it there. That's our VTA there. Right? So when it comes to refinement, I'm going to teach you guys refinement, okay? Because personally, I take entries with as very low. I mean, how many pips is this? This is just 3.6 pips SL. That's stop loss, right? And price did not come down. So basically what happened was that how many RR? That's 1:13 RR done and dusted for the day. And we were in the real move for the day. I think there was another one here. Yeah, there's another one. This is another 4-hour candle here. You see it here? Price cleared that 4-hour candle high. Cleared previous candle 4-hour candle high, right? Now look at this one here. It's almost created. I mean, this is a swing here, hinting to us that okay, good, we are almost at the high, and then eventually, well, it didn't give us a swing on this particular time frame that we chose, but price is still at. Now, this is an interesting point. Price is still above the opening price because this is where the opening price is, right? So price is above opening price, cleared the previous candle high, and then now it gave us VTA. Now, where did it give us our VTA? Well, it didn't give us here, and this was where it now gave us our VTA. So short here. Look at that VTA. As you can see, refusal to go low, and then that whole thing there. Now this is because I'm on the 5 minutes. That's why I'm not on the VTA. That's now VTA here, and then that was the. I think that should be the move. Yeah, that's the move for that whole candle. You can see 1:13. That was the move for the whole candle. Right. Now, if we go to lower time frame, let's say on the 1 minute candle, for those of you who like to refine a lot, I'm very sure you would have caught this move as early as this spot here. You see that price as early as this spot here. See that, and then price delivered to our region, to this portion. And as you can see, in fact, the interesting thing about this whole thing is that, see price delivered down until the close of that candle here, and we made 1:35. That's for those of you who knows how to. And then we made good money, and then everybody is happy. We are all good. And the interesting thing is that look at how you were able to catch the trend from the bottom. And then this one too, look at this one that we caught the other time. This long one, this long position we're able to catch here. Also, you guys remember the 1:? Yeah, you see how we're able to take that ride up to that point. Now, the interesting thing here is that other candles gave us VTA. Like for example, this one cleared previous candle high, but it did not give us VTA, right? Yeah, exactly. And it just continued going up. This one also cleared previous candle high, right? But the VTA is below the opening of this candle. So that's another reason why we will know. This one gave us VTB. Yeah, this VTB, right? But the VTB, that's volume transfer to bidders, but the VTB is where? It is below the... I'm sorry, it has not cleared the candle low. This one almost cleared that candle high and then gave us VTA here and before price, but it didn't do it. So that's why we did not take that trade. But regardless, if these are the two trades you take at the end of the trading session, I mean, this 1:25, this 1:7. I mean, that's if you refine this further, you can still get 1:13 or something thereabout. I mean, you're good. You're good, right? And the interesting part is how you were able to catch this from the top and also catch this from the bottom. You get, so this VTB from the bottom. So you see how MBM works for. MBM is just too perfect, right? It's just too. So you see how we are now, first of all, I taught you guys how to trade using price clearing previous candle high and low, and then giving you VTA, VTB. Now I am teaching you how to now filter through this VTA and VTB based on what I have taught you so far, understanding, right? Exactly. Now there are ways you can tweak it more, but I think that I will just reserve those ones for question and answers, okay? I will just reserve those ones. There are still a lot of ways that you can be able to know a lot of things. Yeah, there are ways that you can actually trade this particular one, In fact, trade all the VTAs and you make profit from them. But as traders, we don't trade everything. So I'm just going to put a stop here. Tomorrow, in our next class, we'll be going deeper, proper into understanding inversions. And I think the focus of this class is just to help you understand swing and price continuation, okay? So till we meet in our next class, do have a wonderful trading session.